Hello, everybody. I think we're the last session between all of you and happy hour, so we're going to keep this as fun and exciting as possible. Welcome to our session, Innovation Spotlight, AI in Action. I'm Shruti Prasad. I'm a Senior Director of Strategy and Business Development at Experian Consumer Services. Experian is a proud partner of the Financial Health Network, and I am delighted to be able to facilitate this conversation today. You're going to be hearing from a lot of great organizations that have really been leveraging AI to solve important consumer problems. Some of these problems include getting access to good financial advice, being able to own a home for the first time, and really being able to pay off their debt. And as we know, in this current macro condition, there's a lot of consumers facing hardship that are in debt. At Experian, our mission has been giving financial power to all, and we've been really innovating and leveraging AI in order to do that. My hope is that from this session, you'll be able to gain practical applications, a lot of good lessons learned, and ideas that will help each of you basically formulate your AI strategy for your organization. The format for today is going to include a rapid standing format where each of the presenters are going to come on stage and present their presentations individually. We'll then have a brief Q&A after each session. So with that, let's get started. I'm going to introduce BECU, which is a Washington State-based credit union. Emily Wasserman is an AI product leader and innovator who's going to talk about how BECU is leveraging AI to really help their members and their employees. So please welcome Emily.
Hi, everyone. I'm honored to be here today. I'm Emily Wasserman, and I'm honored to share Becca, BECU's AI conversational assistant. So we know people want to make smart financial decisions. We also know that personalized financial advice is inaccessible to the majority of the population today. With Becca, BECU's conversational assistant, we're able to provide personalized financial guidance to our members in a way that meets them where they're at and helps them to make informed, proactive decisions about where to spend, save, and plan for their future. I'm going to share a few simple examples with you today that represent a really important shift in how people are interacting with their finances. Traditionally, digital banking has been very passive. You log in, you look at your account balances, you might look through your transactions, but then it's on you to know what to do next and to take that action. What Becca does differently is turn that into proactive, conversational experience. So, for our first example here, we see Becca notices this member has some extra money sitting in their account, maybe a little more than they would usually have that time of month. It says, why don't I take that money and put it towards your highest interest debt? This is something that individual might not think what to do on their own, but it has immediate financial impact for this individual. Next, we see someone who's in a moment of stress. They have an unexpected expense and they don't have the money to pay for it. Here, Becca doesn't just answer the question, but it understands the situation, responds with empathy, and helps them to take action to access the funds. And then in our third example, we see that there's an opportunity for this member to hit their savings faster. While these are all simple examples, it shows something that Becca's not just providing information. It's helping them to actually take action towards their goals and improving their financial health. So the next question becomes, what are people actually using this for? So our early results are starting to show that members aren't just using Becca for a simple Q&A. They're coming for real financial decision making. At our core, we're seeing usage around debt prioritization, budgeting, savings, questions like, how much can I really afford to save? What should I pay down first? Or where's my money really going? These are the types of everyday financial decisions that have a real financial impact, but they're really hard for people to navigate on their own. But it's not just those day-to-day decisions. We're seeing questions come up around longer-term planning, like saving for a home or planning for retirement. And what's powerful in those conversations is that they're grounded in actual financial situation, not just generic advice. So what I want to highlight here is not the breadth of the topics, but the depth. Because in traditional tools, you might get a static answer or a generic response. But what Becca does is actually understand the full context. It knows your spending patterns, your balances, your goals, and it helps to connect the dots among them. So instead of isolated answers, we're able to provide guidance that actually reflects the member's real financial life. And that's why those examples we saw earlier matter, because they're not just one-off interactions. They're a chance for us to make patterns of how members are starting to engage with their finances in a more proactive way. So historically, this level of financial guidance has only been available to people that can afford a financial advisor. And that's really the opportunity in front of us, and this is what AI is allowing us to unlock, is not just to optimize the systems, but to fundamentally expand access to financial guidance, and the opportunity to improve financial health outcomes for all of our members. Thank you so much for your time today. Appreciate it.
Thank you so much, Emily.
Yeah.
Question for you. How is AI really helping bring personalized financial guidance to consumers at scale? And what is BECU doing to really take advantage of that?
Yeah, so great question. I think AI is really what makes Becca possible. It gives us the opportunity to scale by unlocking the power of generative AI and being able to put all of those pieces together and connect the dots to really have that meaningful insight and take action on it. And I think that's the part. One more thing too. I think, a lot of people have shame about talking about their finances. So even if someone can afford a financial advisor, say we take that access barrier away, there's an opportunity to make it to remove that barrier to access, to give people the chance to talk to someone in a way, to a tool in a way that is accessible and take some of that shame and embarrassment away that they might have talking to a live person. And we can then hand them off when that time is right and present them with the tools and the ideas to start putting them on the right financial path there. And then from a BECU perspective, I think what's really exciting is, as a trusted financial institution, we have an opportunity to bring this to our members in a way that is trusted and a way that they are able to access it that they might not other tools. We heard that presenter earlier today talk about ChatGPT rolling out their financial advisor solutions. And there's a lot of distrust in the space. But when it's coming from someone like your trusted financial institution, it can start to remove some of those barriers. And it also allows us to bring some of those actions to life, like I was talking about. Because we're integrated with their systems already. We already know what they're doing, and we can start to bring those to life in a really real way that can have impact directly.
Wonderful.
Yeah.
Thank you so much, Emily.
Thank you, Shruti. Thank you.
Our second presentation is from Candidly, a financial wellness platform that helps consumers manage their student loan debt and really help build for the financial future. Please welcome Laurel Taylor, founder and CEO of Candidly.
Good afternoon. So my name is Laurel Taylor. I'm the founder and CEO of Candidly, and we exist to crush student debt and empower hardworking Americans to go beyond student debt into wellness and ultimately wealth. And while we have developed holistic guidance to address both the assets and the liability side of the balance sheet through our multi-agentic system that is fit for the enterprise due to its deterministic capabilities that invoke tools, functions, skills, and scripts in a compliance-forward manner that provides complete observability and an audit trail. Today, we're going to talk about where I started the company, which is as many Americans growing up in a household where I knew that the way up and out was through the power of education. What I didn't know is that between my mom and I, we would miss out on 2 decades of compounding interest on wealth while paying down debt. So we're going to talk about the application of AI in addressing the education, financing, labor complex, which was once considered a transitory event and is now a structural system that can impose a shadow tax for generations. So today we have 35 million US households that have kids under the age of 18 and are thinking about the cost of college that is outstripping inflation by 4-fold. Raise your hand if you have kids under the age of 18 and you're thinking about the cost of college. Whether you're optimizing your taxes or you're thinking about your 401k withdrawal or HELOC or other means of financing education. We have 15 million Americans upskilling, reskilling, going to school, generating $100 billion of student loan debt. And then we have 47 million Americans in what is an average of a 2-decade journey, paying down their student debt on a $1.8 trillion portfolio that is currently sitting at the highest default rate in the history of the portfolio at 31%, including prime and super prime consumers. So this is what I'm talking about when I say the education financing labor complex. Now, we introduced our conversational AI tool, Kate, about 1.5 years ago, and Kate has deeply verticalized expertise in the college planning and student debt space after about a decade of working in the space, and I want to share a few stories. First, I want to start with Andrew. These are anonymized stories, of course. Andrew came into the experience, he's 16. I have the privilege of reading these conversations that users have with us, and chokes me up every time. They're intense, they're emotional. It is a judgment-free way for users to pour their hearts out and ask for answers. And because of that deterministic capability, we're able to do that. So he grows up in what he calls a low-end family, what we would call low-middle income. His hope is to go to college. He's asking about if that's possible. He's pretty self-aware, he's not that strong academically, but he has a real gift in software development, and he's doing that as a side hustle for Roblox. In the conversation, which was a 50-point turn, what Andrew learned was state-by-state school comparison, college planning and in-state versus out-of-state, scholarships and grants, what he was eligible for, that he's eligible for a Pell Grant, he didn't even know that existed, and how many concurrent users he needs to create on Roblox in order to pay for half of his college. That was his experience when he left. Now let's talk about Joaquin. Joaquin is 32. He went to a school that ultimately was deemed to be predatory. And he's not sure if that school is part of what is considered dischargeable student debt. In the experience, we, of course, asked Joaquin for that information, the details, discovered it was dischargeable, submitted the full application in the 2 minutes that he was in the platform across about a 14-point turn, and now he's going back to college. And then we have a health caregiver, which is about 50% of the end users we have the privilege of serving, who is typical for many caregivers that we serve in terms of her student debt profile. So she has over $300,000 in student debt. She makes about $128,000. She is in what's called SAVE limbo. There was a federal repayment plan called SAVE under the Biden administration. I see many people shaking their heads to this. We had about 9 million borrowers get into the SAVE plan. We still have 7.5 million in the SAVE plan. Those individuals were largely put into a forbearance program. It has been deeply confusing. And as she's in the experience, what she's optimizing for, she wants to be debt-free in 12 years, but she works for an organization that offers public service loan forgiveness. So she has an opportunity to lower her monthly payment commensurate with her income, but she's not sure how to think about that with her goal of being debt-free. Turns out she can do both. In that experience, we gave her the personalized number of what her new repayment plan would be. She submitted her application, her employer signed the form, and we shipped it to the Department of Ed. We have generated $2.3 billion of impact on student debt to date, and we've generated an additional $66 million in first-time wealth creation as a result of so many of y'all in this room that are our distribution partners, the largest financial services companies in the world, and I deeply thank you for that because we are truly changing lives. Now let's contrast a deterministic approach that is invoking tools, functions, skills, and scripts with deeply verticalized expertise versus probabilistic responses. The responses are largely wrong. And when someone has an experience within an LLM or a frontier lab that delivers wrong financial advice, unfortunately, the cost of that is borne often by the user. So let's talk about what we're seeing. Kate, people blow her up at 8 p.m. It's the most popular time. As Emily shared, that's not when a financial advisor is available. We see that the solutions that Kate proposes to that users activate the solution to the problem that they are trying to solve that is surfaced contextually when that user is most likely to take action 3 times faster than traditional static product pages and UIs that are more traditional for the financial services space. 71% of the time, they're clicking through that click-through rate that takes them to that actionable component. And 31%, actually it's increased since this, about 43% of our conversations with users are happening after hours. Last thing I'll share, which is fascinating. So we are measuring about 200 what we call states. 200 states real time in every conversation, and we just presented this study at Columbia. The states that we are measuring range from the financial literacy level of the user. The average user, the average user we serve is actually in mid-30s in the workplace, is speaking to Kate at a 7th grade financial literacy level. Kate responds in an 8th grade level. It's not because the user is not financially literate, it's plain talk. I have $300,000 of student debt. I'm gonna die with this debt. How do I get out of this? Just really raw and authentic conversation and wanting simple, human, empathy-rich discussion and helping that individual solve problems. And we've learned that the intervention is predictive based on the states that the user is expressing within that conversational, multimodal, rich interface that is there to serve the user and improve financial outcomes for all. Thank you so much for the opportunity to share more of the story today and be part of this community.
Thank you, Laurel. That was a great presentation. Question for you. What has AI made newly possible in really helping consumers navigate and manage student debt?
Yes, well, it's a fantastic question, thank you. Because the student debt space has been so complex over the last, I would say, half a decade, which is a long time. There have been new federal programs and policies introduced on a rolling basis. And I had the privilege of speaking with an incredible woman over lunch who's been experiencing this herself. It is the SAVE plan and the Repay As You Earn and the Pay As You Earn and the now Repayment Assistance Plan coming in July and the new education financing caps on Parent Plus loans. And it's so confusing, y'all. The 31% delinquency and default rate is partly because of the level of chaos and confusion. And this is the purpose-fit job for AI in a deterministic manner, is to help the user who should not have to be burdened with the daily digest of what's happened in the last 8 hours of the federal student loan space, get into a repayment program and manage their student debt. So we're shifting from the complexity and chaos into an elegant and easy experience that transforms outcomes in just a matter of moments, and helping the user prepare for the next level of policy change. Outside of the experience of Candidly, if you look at the student loan servicers and many other kind of traditional, it takes literally months for those websites to be refreshed. And so the end user facing solution is lagging the policy, which is also exacerbating the confusion and lack of communication and supporting the outcomes to the end user.
Thank you, Laurel.
Thank you, thank you, thank you.
Next up, we have Ditch, which is a fintech app that leverages AI to help consumers pay off their debt faster. Please join me in welcoming Louise Andino, founder and CEO of Ditch.
Well, hello, everyone. Nobody teaches you about money. You just kind of absorb it like secondhand smoke. You're 8 years old, you're sitting at your kitchen table, your mom's paying bills, you don't know what a bill is, you don't know what a mortgage is, but you can feel it in the room. You know that right now is not the time to ask about that field trip. You know that right now is not the time to bring up the fact that your sneakers don't fit anymore. So you sit there, you eat your food, and you learn without anybody saying a single thing that money is the thing that we don't talk about. And now fast forward, you're 27 years old, you have a credit card because everybody said that you should start building credit when you're young. You have a student loan because everybody said that you should go to school, but your parents couldn't help with tuition. You have an auto loan because you moved to a new city and your pass-me-down 2002 Honda Accord finally broke down and you have to get to work somehow. And you have a BNPL because you moved into your new apartment and your roommates were making fun of your floor mattresses, so you went and bought a bed frame using a firm. And all of a sudden, you find yourself in $71,000 worth of debt. And you have yet to make your single irresponsible financial decision. All that you've done is what everybody else said was the right thing to do. And unfortunately, this is the reality for the new young American. Whereas 20 years ago, the entry point to personal finance was 0, and the goal was to get to 1, to build wealth, to save, to invest, to build your net worth. Now the new entry point to personal finance is -1, tens of thousands of dollars worth of debt, and the goal is simply to get to 0. But the tool set that exists for this customer is very limited and very transactional in nature. What are their options? To go and get a refinance, to go and get a debt consolidation, to settle their debt, or they're asked to go and open an app on a Sunday and budget their purchases and categorize their purchases, and they're asking the person that is already avoiding the problem to look at it harder and do homework, and nobody loves to do homework. And so we've built Ditch to integrate seamlessly into the lives of our user today. How does it work? Every time that you go out and make a purchase, we round up that purchase, and then we send it automatically towards your debt. If you walk into Starbucks and you buy a coffee and the coffee costs you $3.50, we take that 50-cent roundup and send it directly towards your student loans, your credit card, your mortgage, any debt that you're paying off. And in doing so, what we end up doing is building an image of the future for the person where they can finally feel like progress is possible. But the magic happens once the person actually buys into the experience and comes into the experience, because what they're met with is this helpful assistant called Danny. Danny is fully contextualized with the user's financial graph. She knows who you are, your debt data, your spending data, and it can build this very comprehensive picture of who you are and how it's best to communicate with a person like you. Because what we've learned in the past 3 years of building Ditch is that language is the way to break down the barriers that people create around their financial lives. If you're a 23-year-old yoga instructor that lives in Ohio, you're going to respond very differently to the messaging that a 35-year-old software engineer that lives in Seattle. And if you actually want to drive meaningful behavioral change in the user, then you have to communicate them in a way that actually makes sense. And once you do that, you then earn a front row seat into all the different moments that define the critical journey from the person going from -1 to 0. You are there for the first time that their credit score goes over 700. You're there for the first time that they have a couple $1,000s left over at the end of the month. You're there the first time that they're credit ready for a mortgage, and you know exactly when the transition happens from debt repayment to wealth building. And through AI and personalization, we can communicate with the user at that moment with the same hand-on-the-shoulder voice that we used to get them through the first one. Because what we've learned at Ditch is that most of the fintech brands that broke out in the past 20 years have very discreetly owned a moment. Mint owned the budget, Venmo owned the split, Rocket Money owned the categorization of purchases, and Ditch is positioning itself to be the brand that owns the payoff. Thank you.
Thank you, Louis. Question for you.
Yes.
How is AI really transforming the debt repayment journey for consumers?
Yeah, I think it's a lot of what I talked in my presentation today. It's this awareness that if you want to actually drive meaningful behavioral change in the user, then you have to actually communicate in a way where the language that you're using can break down the barriers that people create around their financial lives. People are very guarded. Earning trust with a user to actually make a user consider the advice and the awareness that's being generated is very difficult. And for the past 20 years, it's been nearly impossible because, again, if you're a brand that's doing things right, you're servicing a wide range of users, and the way that you'll communicate with one user is not the same way that you'll communicate with another user. So what we've done at Ditch is to build this engine that surfaces language in a way that's actually sensible, in a way that actually breaks down that barrier for the user. We're picking up and building this entire context graph and building this neural engine that actually generates language that will actually make a difference in the user's lives. Again, if you're a 23-year-old yoga instructor in Ohio, the language is going to be very different than if you're a pragmatic person that's a software engineer that likes the math and likes the answers to be structured in a very specific way. And so we're using AI to build language that actually resonates, because once you're inside and once you earn that trust from the user, then you can start actually owning all the different moments that follow, like the transition from debt repayment to wealth building and all the sequence of events that they go and beyond. So in short, we're using AI to create a hyper-personalized experience where we're able to get to trust with the user in a much faster and much deeper and much more significant way.
That's great.
Yeah.
Thank you so much, Luis.
Of course. Thank you, guys.
Next up, we have Nestment, which is a platform that's really helping first-time home buyers really navigate the complexities of the home buying journey. Please join me in welcoming CEO and co-founder of Nestment, Niles Lichtenstein.
Hey everybody, thank you for having me here. I've been inspired by a number of these sessions. I'm Niles Lichtenstein, CEO and co-founder of Nestment, where we've built a home buying coach and platform. And we believe that the combination of human and AI is what will reopen the door to ownership pathways that have felt very, very closed. It's a personal mission for me, so I'll start with a personal story. I was born in Oakland, and when my father passed when I was young, my mom was a widowed immigrant with 2 boys and no job at the time. But we did have a home, and it had appreciated in value. So at 13, I learned how to refinance a house. And then my mom was smart and scrappy, and we ended up renting out the spare bedrooms to international grad students. So the house was chaos, but interestingly enough, it was our safety net that gave us a path towards stability. So that changed how I looked at household and home ownership in America. And I know we're all kind of here because we're understanding that this is, one of the biggest generational wealth builders in the US, but it really is at a point where it's kind of at risk right now. Right? It kind of hit different in November when we found out that the median first-time buyer age in America is now 40. And if you remember, this is right when they were talking about the 50-year mortgage. So a lot of memes about being 90 years old and stroking your mortgage check, right? We'll come back to this, but 700,000 buyers have gone completely missing last year, right? Over 40% have gone, and they didn't just disappear or go bankrupt, so we'll talk about that in a second. And yes, housing has gone down a little bit, but if you actually look at the proportions, last year, typically 1 of 3 buyers was a first-time home buyer. Now it's 1 of 5. It'll be 1 in 10 very, very soon, and we know what that does. That creates this wealth gap between owners and renters. I want to come back to that $700K because that's where we spent 3 years, $6 million, and thousands of iterations and conversations with these folks. The truth is, affordability was a barrier, not a blocker, right? Really, the blocker was fragmentation and navigation. When we talked to them, there were 2 types of groups. One, who actually didn't believe they could afford, but they also didn't know the programs or the pathways that existed. They didn't know that they could co-buy with up to 4 co-owners on a conventional mortgage. They didn't know they could buy a 2 to 4 unit building with a Fannie loan at 5% down, rent out the other units, live in a unit, even have it professionally managed, and it would still be cheaper than buying a single family home. They didn't know that they could actually start maybe with a rental property, gain equity, and allow that to help them. They didn't know Citibank had a program that's 3.5% down with no PMI in their home run program, or that Boston was giving out $50,000 at 0% interest if they co-bought with one other person making $150K or less. So there were all of these opportunities. There was actually a second, even larger group that believed they would buy, but felt overwhelmed and intimidated. And whenever a system is put under stress, that's when you see the inefficiencies. You see the misaligned incentives between lenders and agents, and that's what we ended up really focusing on. How could we take these two groups and support them? And so we started building and productizing co-ownership models and house hacking models and rent investing models, and then we stopped for a second and said, we're picking off all these different groups, but what we really need is a better system. We need to reframe home ownership around the consumer. Take the private capital markets out of it for a minute and start with the consumer and say, how can we do this? How can we take a disconnected process, bring this together, and power it with AI to help us out with all of those complexities? And what came out of that was a full stack solution. It's a human-in-the-loop model, and we'll talk more about that. But remember, the psychology of home ownership and money is so deep, right? Technology can handle complexity, but you need humans to handle the empathy, the support, the confidence that you need to make these decisions. And so we have a system that is 6 steps, and people understand each of these steps. First, buyer intelligence. How can we understand you come as you are? There is no stigma around your credit score, your debt-to-income ratio. We want to be there, and we tell everyone whether it's 2 weeks, 2 months, or 2 years, and we live by that. This month we had people who were 2.5 years when we first launched, and someone who closed in 2 weeks, right? We're here to empower you to learn and understand. The second is we add that human in, a home buying coach, a real human who's going to guide you through the process. So the AI is not about putting up, I guess we should come up with a name for a bot at some point, but right now you don't have to worry about that because the AI is really powering the coach, empowering you as the consumer in the background, looking at what strategies will happen. Then we use that AI to match you with agents and lenders, and we get to work across all the different lenders and all the different agents. And in fact, here's where the human part comes in. If the match isn't quite right, we actually break up with them for you and put you together so you're not stuck in exclusive relationships. But now you've got your dream team there. We can look at financing and affordability, what programs will fit with you. How do we start to look at listings and understand what they will impact your financing? How will the tax benefit that a lot of people don't understand is attached to home ownership help you in this process? What will the equity be over time? And then also help you in that very emotional moment of transaction closing and support. So if you break down this, there's some great places where AI plays a role, and there's some very meaningful places where human, and again, that empathy plays a role. And so for this, we've been able to do over $500 million in first-time home purchases. Just published a study with Prosperity Now, and it was 54% single-family homes, but actually 46% homes, primary multifamily, co-buying, rent vesting, all of these other categories that people didn't even know existed, but we finally got them to do that. I'm happy to say our median buyer age is 32. And our goal is to shift that US age back to 30 so we have that decade of really important rent saving and equity building. And the most wonderful thing happened this year for us. And this is really where workforce and employers, if anyone's here an employer, really matter. We started having our customers take us into the work environment. And in 3 months, we launched Nestment for employers 3 months ago, and in 3 months, we have 50 employers with over 2 million employees, and we're launching a new one every week. I'm up in Charlotte tomorrow, launching with the school district. I was just in Tennessee, launching with Vanderbilt. And so we're here to help support all of those opportunities and bring a free, and here's the crazy part, with AI and all of this, free, low-lift, high-impact benefit to all employees and staff. So we're really excited about what we've developed, again, bringing human and AI together to create something that I firsthand had the experience of, which is that one home can change a family's future. Thank you.
Thank you, Niles. That was great.
Thanks, Shruti.
Question for you. We talk a lot about AI and human support. How does AI work jointly with human support to really optimize the home buying journey for consumers?
Yeah, for anyone who's been through it or going through it, there's so many elements to it, right? You've got everything from listings to agreements to underwriting. And so what AI, I think, is really great at is helping us synthesize and organize this information, right? What it lacks, again, is that kind of empathy, that moment. I get to coach 15 people a quarter. And it is the best experience also. But I'm also there when they've lost that first offer, right? And what that feels like. AI doesn't say, hey, buck up, kiddo, like, go get that next offer. It doesn't hit the same way, right? As the coach who's been there with you through that path, right? And so what we've kind of learned is that you can leverage AI to really amplify a lot of the support, and it allows our coaches to spend high leverage moments. So the crazy part about this, and some might ask, how can you give this all away for free? Don't worry, we make enough money. And in fact, we've created a four-sided win where lenders and agents are making more money than they have, employers are getting this benefit for free, customers are getting more support, and that's because of that mixture of human and AI support. We took a 20-hour support model down to 2 hours, but very meaningful 2 hours. Like, our coaches meet for the first 4 weeks for 15 to 20 minutes each week, because we respect the consumer's time. And in that process, AI is helping build out the strategies. So by the time you're done with 4 weeks, again, whether it's 2 weeks, 2 months, or 2 years away, you have a plan that will get you to home ownership.
That's fantastic. That is such a tough process for consumers, and it's amazing that you're making that a lot easier.
Thank you, Shruti.
Thank you, Niles.
Thank you.
So that wraps up our Innovation Spotlight. Please join me in thanking Emily Wasserman from BECU, Laurel Taylor from Candidly, Louise Andino from Ditch, and Niles Lichtenstein from Nestment. As you can see, right, AI is really shifting from theory to practice as consumers are really using AI to manage their daily finances. You can see from all of our presenters that AI is really helping them solve these complex financial problems. But it's very important to note that AI is still just technology, and we still need people and human interaction in order to drive change. There is so much brain power and innovation in this room, in all of you, as you are really trying to solve complex financial problems for consumers. I think it's very, very important that we really tackle these challenges with thoughtfulness to make sure that we are optimizing AI to really change the lives of consumers, because we have the power to change the world and impact millions of consumers in a very positive way. Thank you so much for your time.